Good morning. My name is Darren Cheatham, and I'm the Florida Policy and Engagement Lead at Chambers for Innovation and Clean Energy. Joining me today is my Chambers for Innovation and Clean Energy colleague, Anfield Housing. Chambers for Innovation and Clean Energy is an organization that works with chambers of commerce and economic development organizations to advance the clean energy economy. We focus on promoting good clean energy policy and programs and look to amplify the incredible economic benefits associated with clean energy. Our nationwide network represents more than 1,300 chambers of commerce and economic development organizations. Founded and led by former chamber executives, CICE works with these associations throughout the United States, including very large member associations and the smallest, those in red and blue states, as well as urban and rural communities. Thank you for joining us, and thank you to our chamber co-hosts. It is my pleasure to welcome you to today's climate resilience discussion. Before we begin, I want to thank the Florida Association of Chamber of Commerce Professionals and for our 4 panelists that will be introduced to you shortly. I would like to say a special thank you as well to the CICE team for coordinating today's briefing. In order to ask a question, please use the Q&A feature on your Zoom menu. Our speakers and co-hosts will see your questions, but other attendees will not. We will be monitoring that section and questions will be addressed during the relevant discussion or at the end of the webinar. If we run out of time, we will try to address all remaining questions offline. The webinar is being recorded for possible use in the future. Now, to set the context for today's discussion, I would now like to introduce one of our co-hosts and panelists, Dan Lindblade, President of the Fort Lauderdale Chamber of Commerce. Dan has over 30 years of organizational management experience on the national, state, and local levels. He leads the executive management team at the Chamber's headquarters in downtown Fort Lauderdale and lobbies on behalf of business issues and is the spokesperson for the organization. Dan currently serves as the chairman of the Housing Authority of the City of Fort Lauderdale, sits on the Orange Bowl Committee, the South Florida Business Council, the Winterfest Boat Parade, and the Greater Fort Lauderdale Alliance, and many other organizations. He is a certified association executive and graduated from the University of Wisconsin-Madison with a BA in journalism. As a former Broward County resident myself, I'm excited to have Dan here to tell us a little bit about why the Fort Lauderdale Chamber is focused on climate risk, climate resilience, and clean energy. Take it away, Dan.
Well, good morning, everybody. Thanks, Darren. So happy to be here. Thank you for inviting me to participate here. I'm honored to be here representing our organization and the region. 17th largest economy in the United States by GDP, our Tri-County area. About 8 years ago, I was invited to a luncheon down at our Diplomat Hotel, the largest hotel in Broward County. And I was really immersed in the risk that is involved with climate change. At this time, if you just think back, and it wasn't that long ago, we could not even use climate change or sea level rise in the political circles in Tallahassee. But at the time, at that meeting, I brought a number of business leaders with me, and we were all shocked at what the possibilities could be if we did not adapt and we did not mitigate. And we're going to get into some of that this morning when we talk to our panelists. But at that point in time, I brought it back to our directors and I said, our $1 trillion worth of investments up and down the coastline, but also interior within our region. For those of you who don't know our area, we are kind of squished between the Everglades and the Atlantic Ocean. And then we have really porous rock for our bedrock. So we got water everywhere. And so we need to protect our systems, our Central and South Florida flood control system, and all of our barrier island, which is really our tourism area that we have that's done so well coming back off of COVID here. So we brought it to the board. The board approved it as a strategic direction. It's a legacy issue for us now. We had created the International Resiliency Conference and Convention to really have South Florida as the premium spot for solutions. So we were going to bring last December, Darren, the world to South Florida. And of course, COVID really caused all of us to shut down our in-person meetings and whatnot. So we haven't been able. We're going to bring it back. So we are going to bring the world to South Florida. on solutions. And now we've embedded resiliency in all of our businesses. Back 8 years ago, when we talked to our construction companies, they didn't even have it on their strategic horizon, and now they do. So this education process has been the most important part of it. We've partnered with our South Florida Compact, which is the regulators and scientists. We partner with our other municipal and state government on all of the solutions that we're putting in place right now, changing building codes and whatnot. But it has been a labor of love for me, but I'll never finish it in the few years I have left here at my organization. So I'm looking forward to talking more about it. I have some questions that you've posed for me. Do you want to ask them, or do you want me to just go into them, Darren?
Hey, Dan, I'd be happy for you to just go right on into them.
Okay. So one of the things that we had to center on was how all of the issues related to clean energy combine with sea level rise and global warming. And what we found out is no big surprise to most of the folks on our panel, of course, and most of the folks probably on this webinar, is that they're all interconnected. Our carbon footprint needs to be reduced. Yesterday, I was with colleagues from our region. We had Dr. Jennifer Gerardo presenting on her findings. She's our Chief Resiliency Officer for Broward County. And I was watching some of the body language from my colleagues, and for some of them, this was their first taste of what we were in for. So Dr. Gerardo has a group of her colleagues up and down the coastline who've really put in place the projections for where we're going to be in inches or meters of sea level rise and how that's going to impact, and in real time show how building codes will have to change and how we'll have to raise buildings, raise roads, all of those mitigation and adaptation techniques that we'll be bringing to the world here when the IRCC, the International Resiliency Conference and Convention, kicks off. So that is probably the most important part, and how we change using fossil fuels and move to electric or hydrogen powered vehicles in order to reduce the emissions. A lot of folks have talked about this for years and years. Actually, we're going to Washington, D.C., hopefully in October with a delegation, and we're looking at green hydrogen tax incentives to produce that. So there's lots of different areas that our partners like Florida Power and Light have brought to bear, some of their work that they've done in solar and wind turbine energy resources. And we're just really thrilled to have the type of partners that we're working with. And you know what? All on the same page, business and government on the same page, rowing in the same direction. That's what's really moved the needle for us. And I have to give kudos to Congressman Ted Deutsch, who is my congressman, for creating the first bipartisan compact in Congress, Republicans and Democrats sitting at tables talking about what we can do as a country to reduce carbon emissions and to stem the tide, no pun intended, on global warming. So those are a few of my thoughts. I'm really pleased to be here, and I look forward to the comments from my colleagues.
Great. Thank you so much for that opening welcome and opening remarks, Dan. Really great to have you here. I know all the hard work that's going on in South Florida, and particularly in Broward County. So I look forward to the discussion you'll be leading later on in the webinar. So I'd like to tell you a little bit about how we've structured the webinar. It's going to be structured in 3 separate distinct discussions. The first discussion is going to look more at the challenges that climate risk is posing to the Florida business community, particularly around rising insurance rates. The second discussion will examine some of the investment opportunities to lower climate risk. And the third will dive deeper into policy that is addressing Florida's increasing climate risk. Now, for some of you that may have missed our 2021 legislative wrap-up webinar in May, we heard from Senator Brandis and Senator Brodeur about the need for a statewide climate resiliency bill to centralize climate resiliency efforts. There existed a need to knit together the patchwork of localized projects and programs so that the state can know exactly what is going on to mitigate climate risk. This year, Governor DeSantis signed landmark clean energy legislation, Senate Bill 1954. And some of the key provisions in this bill include an annual $100 million spending plan that will be submitted by the Florida Department of Environmental Protection for local climate resilience projects. It also includes the development of an apolitical scientific data set on climate risk that local governments and the business community can look at and respond to better understand where the climate risk exists and what the challenges and opportunities are around lowering that risk. We're going to do a much deeper dive into this policy and legislation framework and how it's going to be implemented in our third discussion. But one of the poignant remarks that I can recall from our May discussion was made by Senator Brandis. And his words were, whether or not you believe in climate change, insurance companies do. And they're watching to see the steps that Florida makes to mitigate that risk. And he also really urged, and I think, Dan, you really touched on this as well, the need for the public and private sectors to be on the same page and to work with insurers to identify those actions and those projects that are going to get the state the most bang for its buck. Because although 100 million yearly sounds like a pretty large number for a state as big and as vulnerable as Florida, that money can go pretty quickly. So it's important that there's alignment in that everyone is, we're choosing the projects that are going to bring the most bang for taxpayers' dollar. So with that context, I would like now to give the platform back to Dan to introduce our second panelist, Anita Byers, and kick off our discussion on climate resilience and Florida's rising insurance costs.
Thanks, Darren. I'm really excited about talking to Anita about this. You know, Anita and I have known each other. I got back down here in 2007, and Anita is our insurance company of choice here at the Chamber. So she insures and underwrites all of our protections, I'll call it, for building and E&O and D&O insurance and whatnot. And Anita, let me tell you a little bit about her. She's the president of Sentner Buyer Insurance and Risk, which is an independent agency formed over 30 years ago to provide property, casualty, and group benefit products and services to businesses and families. She's a graduate, she's a Gator. So we get that out of the way right now. I'm a Badger, but she's a Gator. And she joined Sentner Buyer as the principal shareholder and focused her attention on business development, improving the risk management offerings in her firm. In '97, she founded The Human Equation, an online education provider that delivers training and knowledge to businesses throughout the US and Canada. Sentner Buyer Insurance and Risk is consistently recognized as a leading Florida independent insurance agency. And Anita is an educator at heart, and she's involved in a lot of different areas where she brings her expertise and broad range to audiences. She is called upon often to offer her expertise on topics ranging from healthcare to workers' compensation and intellectual property risks. She's a member of the Greater Fort Lauderdale Broward Workshop. She's a member and board and vice chair of the Commercial Property and Casualty Joint Underwriting Association and the Florida Residential Property and Casualty Risk Underwriting Association. And most importantly, she is on my Council of Economic Advisors. So welcome, Anita, to the platform. It's so nice to have you here.
Well, thank you for having me. I think I'm going to be the most unpopular presenter today when you talk about insurance premiums, but thank God there's Zoom. There's a screen between me and the audience, so I'm okay.
Well, you know, it is an important topic. I learned early on that if we don't address this, it's going to be a big problem for us as far as insuring our property. So let's start very basic. What's the connection between Florida's climate risk and property insurance rates?
Well, the climate risk obviously brings on droughts and fires and sea level rise and storms and frequency of storms. And there's only 4 groups of people that are funding that, right? Insurance companies, financial institutions, individuals, and government. So they're pivotal, insurance companies pivotal in securing that risk. But people have to remember insurance companies are for-profit enterprises. So they need to ensure risk that they have a opportunity to make money on. And climate change is definitely not starting. Most insurance companies recognize the fact that climate risk is a big risk and changing, but fewer than half of them have really gotten aggressive about resolving that risk. They're starting to get there. And they got, people like you in the chambers and the noise around this topic. At one point, Dan, when we started this topic several years ago, part of the conversation was, let's not scare the banks. Let's not talk about climate change. Let's pretend it doesn't exist. Otherwise, we'll have trouble funding businesses in these higher risk coastal communities. But I think we all realize that we had to start talking about it and creating solutions and not worry much about risk as long as we can create solutions around it.
So it sounds like, based on that comment, that insurers have changed their perspective on climate and the risks associated with it. Is that the case?
Yep, it's been gradual. What they've done is, but here's something else that's going on with them. They have always relied on historical models to assess risk and pricing. And they're realizing that the historical models are no longer working because the changes we're experiencing today, whether it's that crazy hailstorm in Texas or the fires in California, Colorado, the consistent flooding, they're starting to realize that the climate is moving a little faster. And now they're looking at deeper analytics to try to project what they will be dealing with in 10 years. So now they're looking at, and because today's climate ultimately will impact them in about 10 years, right? Right now, they can deal with it bit by bit, catastrophe by catastrophe, but 10 years out, they've got to get a little more sophisticated modeling to figure out where they can afford to insure at what price.
So let's dive a little deeper on that. What are insurers doing to limit their risk and their financial viability?
Well, right now it's a year by year, policy by policy approach. They look at, well, they're looking forward 10 years, but they still make money in the present, right? They pretty much assured that if we produce this product at this price, we can make money at least for the next 12 months. And that's a good thing about insurance. It's only a 12-month commitment. It's a 12-month policy. But with that said, and particularly in Florida, we're dealing with excessive claims, in part coming from what we call social inflation, which is everybody putting in a claim and wanting more money for their claim. And in Florida, we had the unscrupulous roofing contractors putting posters on doors saying, hey, your roof looks like it probably was damaged from Irma 3 years ago. So the insurers are starting to get a little wiser about what properties they'll insure, how close to the coast they'll insure. I was trying to write a risk for a friend of mine, I think Steamboat Springs in Colorado, couldn't get 90% of the market shut down because of the fires. So they are capable of quick movement to shut down opportunity, capacity based on current, and we're in Florida homeowners. Older properties, older roofs, we're seeing 50 to 100% rate increases on some. Newer properties, newer roofs, 10, 15%, that's still good to go, but they're getting very aggressive on homeowners. I know this is a business conversation. We have one insurer, I won't name the insurer, but A-rated national brand will not write a home in Florida with a roof over 5 years old. I thought it was a typo, Dan. I thought it was a typo. It wasn't a typo. My commercial insurers are really looking at the roof and the age of roof. And a lot of property insurance commercial in Florida is through the Lloyd's of London type facilities. We call it surplus lines not admitted. Those folks are permitted to develop policy form in any form. They're starting to put depreciated value on roofs. Too close to the water, we're getting premiums that could 100% more to insure wind loss. We're starting to see insureds not insure certain parts of their risk. Willing to take the risk, I'll self-insure, I'm not paying that premium. But all in all, we haven't had one client go out of business yet because of insurance costs. And the market is still out there and available. No doubt Surfside's created a little market confusion because of the convergence of what they think might be climate change and the economic cost of that event. But that event was largely just an old building that wasn't attended to. But the market's responding to all of that. We're getting some crazy premiums, including general liability and directors and officers increase, because it all migrates over to other risks. So a property risk can actually create a D&O claim and a liability claim.
Right, right. So other than the repricing and rearrangements, what else are you seeing?
With the insurance companies, well, what we're seeing in the industry is a shift to finding more than your old-fashioned risk transfer, 100% guaranteed cost risk transfer insurance policy. We're starting to see renewed interest in parametrics. Parametrics is a policy that's based on an event. For instance, a Category 5 hurricane is the event. If that event occurs, insurance company, the parametrics company will cough up a given amount. So we're starting to see alternatives to insurance. The insurance industry is starting to work with financial institutions, hedge funds. Can we come up bonds? Can we come up with alternative sources for funding this? And once again, everybody's going to want to make money, right? So the insurance companies are getting very aggressive about risk management, looking at properties. And it used to be that I would get a 1-page, you got to correct this about your property, that about your property, pretty easy to do. My 1-pagers are now 3 and 4 pagers of what clients have to do to secure their properties, from their roofs to their elevations to sandbags. I think we saw what happened in Vizcaya. They have a new, I guess, a barrier, flood barrier. We're looking at stuff like that. But the industry is going to be a leading sector in solutions because they want to make a living. So they've got to, join government. They've got to join individuals and create robust solutions around this risk.
Thanks for that. So the scientists, and I heard it yesterday at the meeting I was in, they have the projections out to the next century on what the increase in sea level is going to be. But I'm sure insurers have been forecasting the cost of climate change. What does that number turn out to be?
Well, on an international level, it looks like right now it's 2%, the cost of risk, 2% of GDP. It's expected to go to, by 2050, 4% of GDP. Climate-induced costs.
That's
And
amazing. That's a big number.
That's big. And we're going to have to compromise. All of us are going to have to compromise. Let me share something else with you. There are enterprises out there right now that are budding enterprises, nonprofits, for-profits, looking at what we call repetitive flooding areas, right? So the National Flood Insurance Program, FEMA, says after 2 flood events, you're no longer eligible. It could be 3, so forgive me, no longer eligible for flood insurance. It's paid for by the taxpayers. We're not going to keep letting you continue to reside in a home that continues to flood. There's movement underfoot right now for industries that will be funded in part by very large grant institutions to find a way to relocate these folks that are in those repetitive areas, flood areas, and turn them into greenways. And we all know that greenways help absorb rain, right? Concrete doesn't absorb rain. So there's a lot of creative things occurring now. I think we finally have the public will, the momentum, the cooperation. And you're right. Years ago, even today, I don't know if the word climate change is popular in some circles, but when you have a Republican governor willing to use the word climate change, it might very well be real. Could it turn around? Yes, a major volcanic eruption could possibly reverse climate change. But right now, the way it's going, we are heating up.
Yeah. And I got to hand it to Governor DeSantis. He really did put his money where his mouth was and has the right direction for the state of Florida right now with the programming that he's headed. Well, proof's going to be in the pudding, though, when it's executed and worked on locally here. And you brought up something that I thought was interesting, and I want to make the connection between mitigation and adaptation and rate, because what we were told, at least when I first started working on this, was if you do nothing, you're not going to be able to either be insured or afford it. So how do regulators, how do the actuaries use mitigation and adaptation to figure out what the rate's going to be? Do you know?
Oh, no, that's pretty sophisticated, right? A rate is nothing more than if you give me $100, what is the actuarial statistical shot of that 100 being used? What percentage that's going to be used? So they are doing deep dives into analytics, and they're being very, very cautious about coastal communities. They will ultimately look at places like epicenters like Fort Lauderdale and ask our water district, our Jennifer Harados of the world, what are you guys doing to make certain that we will be able to insure the risks in your community? But right now, we have the beginning of planning, we have a lot of analysis, but we don't have the infrastructure yet developed for the insurance companies to price based on that. It's right now all assumptions. So what they do is they look at last year, they increase the rate based on last year's losses, and then they are proactively working with government institutions to try to support infrastructure changes that will make the risks tenable for them.
Anita, you're just a wealth of information and knowledge, and plus you play the guitar, so that's the other reason I love you,
Yeah,
because I play the guitar too.
We're like me and my two sisters are like the Lennon sisters. Remember them? I think I was like 2 years old, maybe a year old. Yeah, we all sing in my family. It's like Sound of Music.
So we got about 40 seconds left. Anything else that you want to add to your comments today?
I do want people to understand that they've got to be proactive. For years and years and years, individuals, companies, when they transfer the risk to the insurance company, they washed their hands and said, I'm done. The insurance company has to pay this. They need to start now on making certain their risk is the kind of risk they're willing to fund themselves. Because if they're not willing to fund it themselves, they're not going to find anybody else to fund it.
Well, it's always a pleasure to talk to you. I'll see you next week at our Council of Economic Advisors meeting remotely. And at this point in time, I'd like to turn it over to Anfield Housing. Ann?
Hello, and thank you. Wow, that was a great discussion. Thank you very much to Dan and Anita. That was really interesting. And I appreciate your both helping us to understand the connection between insurance rates and climate change. That added a lot of clarity to that. So as Darren mentioned, I am his colleague at Chambers for Innovation and Clean Energy. I have a business background and previously have worked on designing and managing green data centers, powering data centers with renewable energy, and recently have worked with the chamber community and the business community, kind of really helping to flesh out the business case for clean energy. Because of course, every business has to figure out, what's the return on investment for implementing clean energy. So that is part of my background. And so today I am very, very happy that we are joined by Chris Sherrick. I'm going to go ahead and introduce Chris, and Chris has a wonderful background. So what you've heard so far is a good articulation of the problem statement, kind of what's happening with insurance rates and kind of how that's impacting us financially. So Chris is going to talk to us more about kind of making that linkage of resiliency investment and investment in resiliency infrastructure. And obviously that's important to address the problems we've been discussing, but what Chris brings to us today is kind of a lot of the solutions. So Chris is currently working with Jacobs, many of you may know, a national engineering firm. And he is also a director at the Manatee Chamber of Commerce. And Chris is the chair there of the Natural Resources Committee. And he is a native of Florida from the Space Coast, a UCF grad, and has a long list of certifications in project management, engineering, and environmental topics. He's served as a utilities manager for a Florida municipality, 15 years with an international engineering firm. Then he started his own firm, and now he's with Jacobs. So many, many, many qualifications here. So Chris, I'm going to start with a few questions for you.
Thanks, Ann.
Okay, great. Thank you so much again for joining us. And again, we're kind of pivoting here to solutions. So Chris is working in all those kind of interesting technology areas that Dan and Anita were referring to that we need to have to address the kind of problems we've articulated. So the first question I have for you, Chris, is if you could just talk about some of the projects that you're working on right now that address resilience issues, and maybe some of those are distributed energy or battery storage.
Sure. And thanks again for having me. And I do want to thank our Florida resiliency lead, Jason Bird, helped me put together some of this information to present today. So thanks, Jason, for that. Jacobs is an international global engineering firm, 55,000 people worldwide. And, some of the things I'm just going to highlight are here in Florida. We're working on a resiliency study for Jacksonville Electric Authority, which does water, wastewater, and energy. We enhance their system reliability and operational continuity against flood threats, electrical, mechanical, and instrumentation and control failures. So the system enhancements, they include backup power, redundant power feeds, and making sure that the system itself has multiple redundancy and reliability built in against the power failures. So that's up in Duval County in Northeast Florida. We're also working on a stormwater master plan for the city of St. Petersburg, and that's focused really on the flood risks and reduction, the reduction of flood risks out to 2070. And again, as Dan pointed out, there's different curves that we're looking at, and city of St. Petersburg has taken a pretty conservative stance on that, and that does include some of the sea level rise projections as well. And then finally, at Tyndall Air Force Base, actually where I was born, we're doing a $4 billion rebuild of that base, of that Air Force base, actually creating a design standard base of the future, essentially, after Hurricane Michael devastated almost 80% of the buildings there. And the interesting thing about that particular project is that it's not, most of the time we're focused on hardening of infrastructure, concrete, elevating things, moving things to higher ground, that kind of thing. But this one actually includes like nature-based coastal flooding systems. So you've got mangroves and things that are protecting the shoreline, which is much more resilient than us building some kind of a concrete wall. So those are just three of the different kind of projects that we're working on throughout Florida that I wanted to share with the group.
Oh, okay, great. And thank you. You made the connection too with Anita's prior comment, the emphasis, just to punctuate it, of like a nature-based solution. Anita, you referred to it as greenways, but kind of the difference between when we put down concrete versus a substance that can absorb water. So, like the grass in the ground and, various things like that are great. They're not only great solutions, but obviously we can enjoy them when there isn't a flood. They're, nice open spaces. So thank you for punctuating that. So the next question I have for you is just, kind of tying into the fact that we have a lot of chamber professionals on our webinar today. As a director at the Manatee Chamber, I just wanted to ask you to elaborate a little bit more on Manatee County. And we've made reference to the battery storage and energy storage, and maybe you can just talk a little bit more about that and the ribbon cutting that occurred last week.
Yeah, terrific. And just last Thursday, it was actually postponed because of some storm that happened a month ago. But FPL, they have built the largest solar powered battery storage facility in the world in Manatee County. And we had a ribbon cutting ceremony last Thursday for that. I think there's a picture we're going to show. If we can pull that up, that would be great. And I am going to back up just a little bit, because in pre-2000, this facility was fueled solely by oil. There were stacks. Oh, it's not picking up in the very back, but there were 4 different stacks back there. And I actually remember touring that facility when I was in leadership Manatee. That facility was powered solely by oil. And around 2010, the facility was converted from oil to natural gas, still using a fossil fuel. However, that fossil fuel is 3 to 4 times cleaner than using the oil. And then around 2016, FPL completed a 74.5 megawatt solar array. And again, that's off into the back left of the photo, and doubled that in 2019. And I think at the time it was the largest solar array in the world, but that quickly gets trumped as the solar has been really taking off. FPL has got an objective of putting 30 million solar panels online by 2030. 30 by 30 plan is what they're calling that. And then just last week, as you can see here, these containers, there's 132 batteries that are being put in. The sun doesn't shine at night. So with that solar, they're coupling the battery storage facility. And this is a 409 megawatt storage facility, but it's a 900 megawatt hour of battery storage. So there's It provides 409 megawatts of electricity, but it has 900 megawatt hours of storage. It is the largest solar powered battery storage facility in the world. And it was an incredible discussion with FPL because they have no more coal-fired power plants in Florida, none. And showed the pie chart, and of course the solar sliver is getting larger and larger and larger every couple of years. So it's just a really exciting time to watch what some of the electric companies are doing, particularly FPL. Next Era Energy is their name outside of Florida.
Wow, that's great. And that, as they say, picture worth 1,000 words. That's a really impressive picture, and really notable kudo for Florida, having the largest energy storage facility at the moment. That's amazing. So, okay, so I'm going to keep us on time. I'm going to just skip forward a little bit here and take us to the topic of electric vehicles, Chris, because Chris has just like an amazing amount of expertise in this area. So I want to make sure we get this in. And I'm curious about what you're seeing in the area of electric vehicle charging infrastructure, because I know that's another area that Jacobs works in, and kind of talking maybe about that growing opportunity and what it means for Florida.
Yeah, and Dan hit it on the head. Our governor here has put his money where his mouth is. We've got a number of things going on. Jacobs actually built the SunTrax facility as an autonomous vehicle facility near I-4 in the center of the state, where DOT is actually testing these cars at high speeds, and also within a city, a simulated city environment in the middle. We're not going to do EVs without doing the autonomy with it. Those two things kind of go hand in hand with the technology that's there. But I've been driving electric since 2011. I went to a trip to Iceland and spent $1,000 on gas, and I just came back and said I'm done. And at the time, there were only a handful of electric vehicles, but now, I think Anita said the Republicans are even saying climate change. Well, even Ford is making an electric vehicle. So if Ford is doing it, then that means that this is actually something that is going to be propelled into the future. I mean, the number of electric vehicles, the demand for them and the adoption of them is an exponential curve. To compare that to the hybrids in 2000, the Prius and that kind of thing, that was a linear adoption. It's very much slower than what we're seeing. Mm-hmm. And so with this exponential curve, there's all kinds of opportunities. And the earlier you get on board, the better off you're going to be. You'll see more either federal tax credits, longer warranties, or even free charging. Things like that will go hand in hand with those that are willing to be upfront and take the risk and be the pioneers. I will share one business case, since this is a lot of chambers are out there. There's a lot of incentives for businesses to consider either putting in a charging station near their business or locating their business near the charging stations. People spend their time and their money around these things. 2012 or 13, I was on my phone, drove across the state, trying to find a charging station on my phone. And there was one at a Kohl's. I'd never been there before in my life. We went in there. My wife bought $400 worth of dishes. I went to the manager, said, one, I wouldn't even be in your store, and I got $1 worth of electricity, right, to charge my car. And my wife just bought $400 worth of dishes. So I think I'm trying to share that with you to show that people spend time and money around these charging stations, and those businesses that have them, hotels, malls, are going to attract those kinds of customers where they're going to spend that money and time.
That's great. Yeah, I love the anecdote about, like, sometimes, businesses will sort of file putting a charger in as like a do good thing, but like your example is no, good business. This brings foot traffic and people into your business or your chamber office. A lot of chambers have put them in front of the chamber office. So the last question I have for you is just kind of punctuating what you've already said as we wrap up here, Chris, is just kind of, can you just comment on that dynamic between making the charging stations more pervasive, and how that then accelerates the adoption of electric vehicles? So the example in Florida on the interstate, putting fast chargers.
Yeah, and again, the technology itself has really evolved as well. Tesla recently announced that they're going to make their chargers that they went out and they installed and they built that network of chargers. They're going to make that available to other car manufacturers. So that should be next year. And just like the adoption of the cars, the growth of the charging infrastructure is gone exponentially as well. But I will say that 80% of us are going to charge at night at home. We're going to plug in our phone, our car, just like we plug in our cell phone. We're going to charge at night. They say another 15 to 20% will be at businesses. So you'll go to work, plug in, you don't drive home. And then really the last little bit of the pyramid there, last top 5%, they say, is what we call convenience charging. So at malls, at hotels, at those kinds of places. But, certainly Florida putting in these fast chargers along the interstates, that's just really going to set us, apart from the other folks. So yeah, it's exciting times. But, again, it's 10 years I've been watching this, and I think finally we got some serious traction.
Great. Thank you. Thank you, Chris. Thank you so much.
Sure.
That we really appreciate having your expertise with us today. This
Thank
is
you.
great. So next, I'm going to turn it back over to Darren for our third panelist.
Great. Thank you, Ann. And thank you, Chris, for leading that helpful discussion. I think it's really great to learn more and hear more about these, concrete investments that are already happening on the ground here in Florida that are helping support climate resiliency. So thank you so much for sharing all of your knowledge, Chris, with us. Now, I'd like to kick off our third and final discussion with Alex Wood of the Florida Department of Environmental Protection. Alex began her tenure with the department in 2009 with the Beach Management Funding Assistance Program. She served as the director of the Division of Water Resource Management before being appointed a director of the Office of Resilience and Coastal Protection in November of 2019. Alex earned a BS in geology from Florida State University. And with that, I think, Alex, maybe we can start off. I gave a very, very high level introduction about this, landmark climate resiliency bill that was signed by Governor DeSantis this year, but perhaps you can kind of kick things off by diving a little bit deeper into this legislation that was passed this year and how DEP is working to implement it, and maybe talk a little bit about the kind of role that you see the business community being able to play in the implementation of this legislation.
I certainly will. And thank you, Darren. I'm excited to be here. As you said, this is landmark legislation. The state did not have a very strong presence in the resilience world up until a couple of years ago with the creation of the Resilient Coastline Program. So this was a giant leap ahead of that. And so some of the exciting things about this legislation, and it's very complex, it's very comprehensive. There are a lot of moving parts in it. So whenever I get a little confused or a little overwhelmed, I like to revert back and read the intent section. And there are really 4 components to that intent section. Number one, the state is acknowledging that we have a challenge with sea level rise and flooding. So making that statement is very powerful. Number 2, it creates a grant program to help our communities to adapt and to mitigate for some of the challenges that they're facing. Number 3, it says that we need to do this together as a state. We're no longer just focusing on the coastlines, but we also know that we have flooding issues in inland communities as well. So this is a comprehensive process moving forward. And lastly, it says that we need to start with a statewide vulnerability assessment where we have identified all of our critical assets. We know the mitigation and adaptation strategies that we need to focus on, and then prioritize our funding to go to those most critical elements. So that's a really great foundation. And then a couple of other things that I like in this legislation is that it does help us identify what those critical assets are. So we're not trying to figure that out along the way. We know that we need to focus on our transportation corridors. We need to focus on our critical infrastructure. We need to focus on community assets and services. And then lastly, and I'm most pleased to hear that we also need to focus on natural, cultural, and historic resources. That was also included, and that's very important. Another challenge that we've had in the Resilient Coastlines program over the past few years is that there's no standardized, there are no standards for completing vulnerability assessments. Well, this legislation gives us those standards so that we know that every community that is assessing their critical assets for vulnerabilities is using the same set of data to make those the same projections, the same scenarios, so that we have a statewide picture that is consistent data. And we can take the community assessments, put them together into a mosaic, and get that statewide picture for our critical assets. So that's pretty important. A couple of things that are high priorities for us is in the legislation requires that by July 1 of 2022, The department has collected a statewide data set for vulnerabilities in flooding. So we need to know what you've done in your communities, what assets you have, what analyses you've done, and more importantly, what has not been done. What do we still need to move forward with in vulnerability assessment? And then we also need, that data set also includes some of the forcing data that we may be using for statewide modeling moving forward. What projections are we going to use? What kind of precipitation projections are we going to use? Those kinds of things. So we'll be working with the newly created Florida Flood Hub that will be housed in the University of South Florida's College of Marine Science. And then also working in partnership with the DEP's Chief Science Officer, Dr. Mark Rains, to ensure that we have all of that, we understand all the data we need to consider moving forward. And then we'll use that in the next year to create that statewide vulnerability assessment. If we need to do additional modeling, we'll have all that data as the background to complete that assessment. So what kind of help can we use from our communities? We need you all to talk to your local governments. We need you to help identify the critical assets. We need you to help decide what kind of analyses need to be done in the community. We need to know what data is out there and what data we need to move forward.
Great, thank you, Alex. I think one question that I have about this this legislation being passed, and it was such a strong commitment from the legislators and the governor, but is it a first step, or is this seen as something that will hopefully solve the problem, or is this kind of the beginning of a long path in Florida addressing this climate resiliency issue?
Great question, and I see this as a first step. A lot of funding came along with this legislation, but it's a lot of money, and it's not a lot of money when you're talking about statewide infrastructure and adaptation. So it's a great first step. I think that we know that it's a first step, and that's what the governor's office and the legislature are contemplating, because part of the legislation directs the department to create a resiliency plan. And that's a 3-year rolling planning document listing prioritized critical assets in the state so that the legislature can consider those for prioritizing funding moving forward. So if we're looking at a 3-year projection, we know that they're looking long-term, and they're looking out to the future to see how we need to adapt, starting with funding adaptation measures for the most critical assets initially, and then moving out to address all of our critical assets in the future.
I think that might actually partly address my second question, which was, I worked a little bit on some of the VW funding, some of the policy proposals when I was working in South Florida. I was curious to know how funds would be distributed through the Resilient Florida program, if there would be funds set aside for different regions of Florida, or so that everyone had the opportunity to utilize the funds, or if it's kind of first come, first serve, or kind of how the thinking is around that. And it may be too early to know, since the plan hasn't come out yet, but.
Well, I think the legislative intent is that we first get that statewide snapshot. Where are all of our critical assets? Where do we need to focus? And then how do we prioritize those critical assets? There's a section of the statute that actually creates a tiered structure for prioritizing projects.
Okay.
And so we will be moving forward with rulemaking to kind of flesh out that prioritization scheme. And one of the things that I wake up in the middle of the night wondering how on earth we're going to do is, how do you prioritize the replacement of a wastewater treatment facility with stormwater infrastructure, with a living shoreline projects, with flood proofing a community building? So it's the expanse of assets that we're talking about, and then trying to put them on the same playing field to prioritize is going to be quite a challenge. And so we certainly need the brain power from across the state, and our planning departments and our construction departments and our engineers. We need this to be a community effort so that we can move forward and really learn what our priorities are.
Great, and I think that's that seems to be kind of maybe the role that the business community can play, as far as helping local governments access this funding for their projects, helping local governments prioritize what and voice what they feel, the kind of most important projects might be for the business community? Is that kind of the role that you see the business community being able to play in accessing these funds?
I do. And one of the definitions in the statute, it charges us to look at not only critical assets, but regionally significant assets. And I think that's one of the definitions we're all going to have to work on, because not every community has the same assets. But we regionally rely on our communities, our neighboring communities, to provide some of those regionally significant components that we need. So I think that's going to be where the business community can really help us identify what the regionally significant needs are, and how an asset within one community helps others that are adjacent.
Now, will DEP be working with some of these regional collaboratives? I know when I was in Broward County, and Dan is all sorts of experience with the Southeast Florida Climate Compact, which is kind of like a regional platform for business community, local governments to kind of come together to kind of collaborate on these issues. How will DEP, will they be working with those kind of groups, which I think are kind of popping up all over the state, if they're not almost in every region already? Will they be kind of working hand in hand with those groups to throughout the implementation process of this legislation?
Absolutely. So the statute acknowledges that regional resilience coalitions are of value added to our communities. And so there is funding provided for these entities to work for local governments to work together to help all of the neighboring communities start planning for the future, start sharing technical services and resources, helping local governments to submit applications for funding, either for planning grants or for implementation projects. But again, acknowledging that this has to be a community effort. It has to be we have to have a regional approach. So we are looking to the regional resilience entities to help us bring all the communities up together.
Great. Keeping my eye on the clock here, I know we have some questions that have come through, and I want to make sure that everyone's question gets addressed for the time that we have. So, Anne, I'm gonna reach out to you. I know you've been kind of keeping an eye on the Q&A box, and Alex, I also want to thank you so much for your time. But I know some of the questions I'm sure will be directed towards you, Alex, because I know we already got some questions earlier. But Anne, can you maybe cue us up with our first question that's come through the Q&A?
Absolutely. So I think this one was posted, and Chris has been writing about it, but I'm going to ask you to just voice the answer. So one of our viewers asked, who pays for chargers? Are there grants, tax credits, and so forth?
Great question. Yes, and yes. There are grants. Sometimes the grants can be local. There's an IRS form 8911 that provides 30% tax credit, up to 30% of the cost of the installation of the charger for that tax credit. Again, these are the kinds of benefits and incentives that are going to be there now and will not be there in 10 years when everybody's driving electric.
Okay, great. Thank you so much. A few people asked us, this is a housekeeping question, just about like, are we going to post the recording? Yes, we will. It will be on the Chambers for Innovation and Clean Energy website. So we will be posting this session to answer that. And then the next I have a question that I think, Dan, you would be best to answer. So basically our viewer asked, when we're encouraging and pushing for more clean energy from our utility, and I'm sure that a lot of members of your chamber and other chambers are taking some actions like installing solar or energy efficiency upgrades. What are some ways that the Fort Lauderdale Chamber and chambers in general should be communicating those efforts and promoting them?
Okay, so the most interesting thing that we've moved towards is a dashboard. Everything from carbon emission to number of solar installations to those fast charging stations. So we took every indice that we could find and our county through Dr. Gerardo and some of our graphics teams, we're creating that dashboard. So real time, as the information gets logged in, we can track it. More importantly, I think it's really the messaging sending out to folks that this isn't a silver bullet. There's no one singular thing that needs to be done in order to fix the problem. We're never going to fix it. We're just going to adapt to it. And so it's a collective effort of all of the best and brightest coming together to bring that mitigation.
Okay, fantastic. And if it's handy to put that dashboard link in the chat now, perhaps you can do that. Otherwise, if not, I'll get it from you and we'll follow up, because I think some folks would be really interested in that. So
if I can find it.
Yeah, and if not, we'll do it after the fact if you don't find it right now, so no problem. So Anita, I wanted to just maybe come back to you. This is just a very general question, but an important one, just about how the business community is responding to climate issues. You know, obviously our federal government is trying to really, I think, emphasize that there's many different areas of expertise you need, that it's a kind of all of government approach. Do you see businesses kind of addressing this less in a silo and more as a pan business issue? Oops. Yeah, I think you're on mute still, Anita.
The public companies are addressing it, the larger enterprises, your mid-market companies, you know, 500 employees and lower. They're kind of relying on the insurance company to tell them what to do next. With that said, they are, you know, with the right risk management group, they might, we had a group that was renting a facility in Mississippi. And I said, you know, you're near a quake zone. Oh, we didn't know that. So very often it's the risk manager that might be participating in some of their go forward strategies, helping them. But the insurance companies are more reactive to that mid-market. But other than the big public companies, or maybe during construction when they're talking to an engineer, they're able to maybe address something. But we're still not getting, I guess, the critical mass in the mid-market small business behind this yet. I think the insurers will be leading that discussion and the impact on them.
Okay, great. And so I'm going to take one last question.
And just to add on to the business aspects of it from Chamber's perspective, Urban Land Institute was commissioned to produce a report called The Business Case for Resiliency. So that really measured a value to every dollar that's spent. There's a return either in jobs or whatnot. And we can give the link to that as well. It's a really good tool to use when you're talking to politicians, because they love return, and business people. That's the language they speak.
Great, thank you for that. That's fantastic. And just real quick, real short, Alex, I was just going to go back to you and see, we've talked a fair bit about electric vehicles and charging. I just wanted to see if there was anything else that we missed or you wanted to add under that heading from a state government perspective.
Thank you. That's a little out of my area, but I do know there are a couple of initiatives being managed through our Division of Air Resource Management this year, using funds from EPA's Diesel Emission Reduction Act and also VW settlement funds. There's a program to replace school buses in communities, and then also add charging stations on the major corridors. I'm not sure where they are in the grant disbursement process, but there probably is information on our webpage. And the Air Director, Jeff Kerner, is a wealth of information. So.
Oh, fantastic. Thank you. Okay, I'm going to now turn it back over to Darren, who's going to close things up. And I want to say thank you to all of our panelists today.
Yes, thank you. Thank you all so much. It is time to wrap up. We have about 1 minute left. I want a special thank you to Dan, to Alex, to Chris, and to Anita. We really appreciate you sharing this wonderful information, this very helpful information for the Chamber's economic development groups and other private sector companies that are on today's call, and how you can become more active in helping build a more resilient Florida business community. I'd like to thank everyone that's attending today's webinar, and thanks again to our co-hosts. You can view today's webinar on our website very soon. You'll receive a follow-up email with that link in the coming days. If we did not answer your questions, we will be replying to them offline, so you can rest assured that your question will be answered. And we all look forward to working with you to continue to develop the clean energy economy in Florida. And I hope you have a wonderful rest of your day. Take care and thank you.